November, the performance was up 12%, which is a year-to-date performance of 27%. That constitutes a outperformance of roughly 16% versus the MSCI World. And since the strategy inception, roughly 3 years ago, the strategy is up nearly 70%, which is an outperformance of roughly 40% over this period. So one of the big moves in November that caused a big move in the market was the Pfizer vaccine news announcement. On November 9 and 10, equity factors moved quite heavily. For instance, the equity momentum factor and the equity quality factors sold off quite significantly, whereas value and size rallied. And these moves were quite extraordinary to the tune of 10 standard deviations. And so that begs the question how the Singularity strategy has performed against that backdrop. When we compare the Singularity Fund with, for instance, the performance of the MSCI World Value and the MSCI World Size, which have done very well, the Singularity Fund has actually been quite on par with those two indices, underperforming by just 2.5%. So we were up 12%, and MSCI Value was up 14.5%. But to put that in context, the strategy is actually year to date still outperforming more than 35%. So that is still significant. And we would argue that in the long run, we would prefer to be invested in companies with attractive long-term growth potentials linked to exponential technologies and healthy balance sheets, rather than switching into companies that are perhaps seeing a shorter-term dead cat bounce move in structurally challenged sectors, such as, for instance, energy and banks. So during the rebalancing, we replaced about 25% of the portfolio. The biggest Singularity sectors in the fund are big data and Internet of Things, with about 20% weight each. And Microsoft and Tencent are core holdings in those sectors. Among the biggest individual weight increases, we have American Tower, Thermo Fisher, and, for instance, Ørsted. American Tower is an essential enabler of connectivity and the Internet of Things, and it maintains and operates a large wireless infrastructure or wireless service infrastructure. And given the strong performance of some of the larger names in the portfolio, these have been trimmed. So for instance, Tesla, Nvidia, and Apple have actually come down in weight quite significantly as we've taken profit and brought them back in line with their rebalanced weight. Tesla had a very stimulating effect on the Chinese EV market, which is the largest and fastest growing electric car market, and it paved the way for some local players to step in the fore. The trend to vehicle electrification in China has been also largely supported by aggressive subsidies for electric vehicles by the Chinese government, and also driven by the fact that the authorities want at least 25% of all new cars sold in 2025 to be electric. So during the last rebalancing, we had two Chinese EV manufacturers come into the portfolio, namely NIO and Li Auto. Both of those companies are growing their revenues rapidly, and they're starting to take more and more market share. And if we look at them combined, their market cap is about 20% of that of Tesla's. And so we believe they still have some room to grow. NIO sells premium battery electric vehicles in the SUV segment, which is the most popular segment in China. It particularly wants to provide its customers with a comprehensive charging infrastructure by offering, for instance, a battery swap technology, which they call battery as a service, or a 24-hour pickup and drop-off battery service or charging service for their customers. And they actually sell their cars directly to the customers, so a B2C model rather than the B2B model that we usually see in the car industry. And they sell those cars through their Neo houses and Neo spaces. Li Auto produces an extended range electric vehicle, which is a hybrid car that packs a gasoline engine that can charge the battery as you go. And it addresses the range anxiety in China due to a still infant charging infrastructure. And so this car has been selling very well, and that technology also looks very promising. We think it's plausible that Neo and Li will continue to take market share, both in China, but also play a more important role globally if they can successfully leverage the low-cost infrastructure in China and the ever-growing ecosystem around battery producers and other suppliers. Another theme that has crept up in a larger size in our portfolios is, or could be organized around esports. So esports is competitive video gaming, or in other words, watching other people play video games. The most popular games that you might be familiar with are League of Legends, Counter-Strike, and Fortnite. And this area has been growing rapidly, especially among digital natives and millennials. And it is actually starting to rival the film industry and the traditional sports industry. So just for context, the esports audience is expected to reach around 500 million this year, which compares to a number in 2018 that was 25% lower. In our portfolio, we have a number of companies that provide exposure to this fascinating ecosystem, including Unity Software, which is a gaming engine, or one of the main gaming engines that these games are built on. We have some game publishers and tournament organizers, such as Activision Blizzard or Electronic Arts, and also platforms and broadcasters that play a very important role in this ecosystem, including Twitch, which is owned by Amazon, YouTube, that is owned by Alphabet, and Douyu and Huya in China, which is owned by Tencent.